Okay, hello traders. Welcome to this live intraday strategy webinar. Today is Thursday, July 14th. We did just get the release of US PPI numbers here in New York, coming in stronger than expected across the board. Looking for a print of 0.3, came in at 0.5 for headline. If you strip out energy, looking at 0.4, also beating previous prints, no downward revision. So a decent read here for producer prices in the US, coming out just a few seconds ago. Now, there's a lot to cover today, and I want to pace myself. As always, guys, if you have any questions or trade setups, please feel free to throw them on the message board. Good morning, Arthur. Great to see you in the room. Graham, Hussein, Madad, Eileen, Mahmood, the whole crew is here. So good to be with you here this morning. Eileen, yes, the BOE did the overthrow with the interest rate decision. We'll go over that at length. I think there was a lot there with the BOE. High likelihood that we're going to see easing down the pipeline. They've all but said it. So I do think you want to be cautious of getting too aggressive on the long side. But the sterling CAD, sterling dollar, both played out essentially as planned last night. So we'll go over those setups as well. All right, so before we get started, again, no downward revision to the previous print. Decent read on PPI numbers. Looking at the dollar index before we get into the nitty gritty, we've continued to suggest that this chart is pretty boring, and it still is. The only thing I do want to highlight is we're coming into that initial support barrier that we talked about yesterday, 11,965. That's essentially where the low was. Today's low, 11,964. So we're right there. If you take a look at the 30-minute chart, it's sort of the barrier of entry that we talked about yesterday for the breakdown of this consolidation that we've been in for nearly 3 weeks now. So there's the break of the median line, automatically catching that 236 basic retracement, nothing fancy. Look for resistance initially at the monthly open, which comes in just below 12,000, 11,998. And if the break is legit, that's where we would expect to see some near-term resistance here for the dollar index. In fact, if you take a look at the dollar today, broader performance is weaker against the board. You got the Kiwi and yen with slight advances here. Kiwi down 1.07. You have Japanese yen down also 1.16, but the rest are all stronger versus the dollar. British pound being the top performer on the session, up 1.6%. Swissy also with a gain of 0.73%. Looks like we may have gotten a near-term seemingly a breakdown in dollar Swiss and a near-term seemingly break out in euro dollar. So we'll talk about both of those as well. All right, so look for the bounce here in the dollar to gather some pace on the release. Again, looking for near-term resistance initially at that monthly open. So the BOE. Well. Who was surprised with this this morning? I hope none of you got caught too off guard. I tried to give you a heads up. It was interesting to see the fact, and we sort of warned about this in the update last night, the fact that the markets were expecting or had factored in such a strong expectation for a cut. You had an 81.7% chance that we were going to see the BOE cut interest rates today by at least 25 basis points. Obviously, they held. Some commentary here I think is worth taking a look at is the fact that they all but said, like I said, that they're going to have further easing down the pipeline, okay? It was an 8-1 vote to keep rates at 0.5%. You did see that most officials expect policy loosening in August. A lot of them cited some concerns about the impact that the Brexit is going to have. Pound's sharp fall puts upward pressure on inflation, which is something they want. They've been trying to stoke it. So it was interesting commentary away from market expectations, okay? And the fact that the markets were expecting such a strong high percentage that we were going to get the cut, the risk, as we noted yesterday, was actually to the upside if they do not cut, okay? And that's exactly what we got, a rip higher. Now, my caution with getting too bullish on the pound here is that we know that there's more easing down the pipeline. We know that there's going to be still more Brexit impact. We don't have all the certainty. We do have a government formed. We do have some stability starting to factor into the equation here. But I would be cautious because we are expecting further easing. So we'll take a look at the chart in just a moment. Eileen's saying dollar weak because of sterling strong and bought euro and Swiss with it, you're saying, I wouldn't want to equate it just like that, Eileen. I would want to say, let me take a step back. The pound dollar is its own exception, right? That's reacting to the data. The dollar, the euro, and the Swissy, remember, Eileen, we've been talking about the dollar index, right? And the fact that we're still in this consolidation zone. But if you look at the update from a couple of days ago, our favored move is a breakdown out of this. So I don't want to necessarily equate the strength in the euro and Swissy on account of necessarily the BOE, right? Because we've been looking for the dollar to correct lower. This just might be the catalyst that we need to get that going. Does that make sense? Just a different way of the thought process of how you approach it. Yeah, it says interesting, euro and Swiss because of the dollar. Then again, it could have been the catalyst, Eileen. The BOE could have been the catalyst to charge those breakouts, but I wouldn't say it's because of those breakouts. Either way, we're playing semantics. We'll go over both those trades in a second. But for the British pound, here's what we're looking at, and here's where we were last night. So, daily chart didn't have really too much to do for last night. Here's what we were really looking at. So we were within the confines of this ascending median line formation, and essentially the bullish invalidation level near term was 130.36. Okay, and as long as 130.36 stayed as support, we'd want to stay on the long side, or we'd be looking for long entries. You didn't get much of a probe lower beyond 131 last night. In fact, 131 held as pretty nice support. Here's what it looks like, or here's what it looked like, or here's what it looks like now on the 30-minute. Okay, I didn't have this on. Let me get rid of this. Okay, and here's what we were looking at. So we came right into that 50 line for the current operative slope that we've been working with. You sat there for a couple of hours in Asia trade before breaking higher. Momentum also giving you a nice trigger break to the upside late in Asia trade. And again, topside targets essentially have all been taken out. The last topside target I noted there was 134.49 right here, I believe. Yes, 134.49, which we took out on the BOE. So from here, you're vulnerable again. Okay, you're vulnerable again. This is not just we're not necessarily stressing that's an 88.6 retracement, but you can see that we couldn't get a close above the upper parallel. And if momentum breaks back below 70, back below this trigger line, you could see a little bit of a reset here for the pound. Long story short, still like the upside. Okay, and we're going to go ahead and bring up the bullish invalidation level at this point up to 31.50 from the 31 handle. And that basically takes you back into that same 50 line that we reversed off of last night. That would be a basic 38.2. Actually, let me take that back. Just bear with me one moment. We'll want to do this. Okay, 31.60. Just a little adjustment there. So that takes into account the new high that we just made. Near-term bullish invalidation. You're looking for a pullback here to get back on the long side. Still constructive while within this formation. A topside break, you really don't have too many near-term targets. The next near-term target I have looks at 135.34, which is just the June 29th swing high. But to put things in perspective, to fill the gap from Brexit, you still need a rally towards 136.75. I don't know if we'll get up there, but certainly near term, today's close will be critical. Okay, this is taking out the monthly opening range high and the monthly opens. Okay, the levels of which we reversed at earlier in the week. So today's close will be paramount. We'll want to see this close above 133 here to continue favoring the top side. Near term, 131.60 is what we'll reserve as our near-term bullish invalidation. Any questions on the British pound or the impact of today's BOE rate decision? So they kind of played both sides, okay? They said that we're not going to cut rates now, but activity is likely to be depressed in the near term post-Brexit. Indications that some businesses are delaying investment and hiring due to the Brexit, and basically saying that more easing is down the pipeline. Now, one thing I did also want to note is where the world interest rate probabilities stand now. So if we take a quick look on how they've shifted, okay, here's what they look like yesterday. Obviously 81% for the July print, but look at August at 87. Now August down to 51. So they're more likely than not to do more easing, but certainly market expectations for aggressive rate cuts have really started to subside. And that kind of pans well with what we're seeing in price action. So a great way of being able to gauge, again, for those of you who are unfamiliar with this is the overnight index swaps. It basically tells you what the markets are factoring in as far as the probability of policy tightening or policy loosening, from the central banks. So we'll continue to monitor this. I just wanted to highlight that you are seeing a dramatic reduction in expectations for aggressive cuts. That being said, the commentary pretty much eludes that we're going to see more easing down the pipeline from the BOE. How far are you looking for the sterling to reset before looking longer again? So for the long side, it depends what you mean. If you're talking about from a scalp basis, I think if the U.S. session pulls us back into here, I'd be looking for initial targets or initial long triggers for price. But I really wouldn't be looking to target anything outside of 34.50 unless we break out. Literally, I would need to break out, pull back, and I would look to get back into long for the subsequent targets. Right now, I'm only looking to play within the confines of this formation. Okay? So to put things in perspective there. Can we ask about the UK 100 effect? Mahmood, you can ask anything you want, my man. I don't necessarily have a setup on it, but I can definitely bring one up. Let me write that down. If we have time, I'll see what we can put together on that. Okay. Any questions on pound dollar? Again, keeping in mind what we just saw, looking for a near-term reset here in price. Give us the opportunity. But broadly speaking, really bucking the market's expectation for an interest rate cut. So moving right along to last night's update, we also had sterling CAD, which also gave us a really even better play, in my humble opinion. Heading into deeper into Asia trade, I was just kind of gandering at this chart, and the daily chart, again, very similar to the British pound in that we're coming off of long-term structural slope support. And it was really the 30-minute that had us at a basic trend line. If you guys remember this from the update before, here's the 712 update on pound CAD. And we simply said, look, the thing made a major breakout. This clears the monthly open and also gave us a break above last week's high. You basically want to stay constructive above the 170 handle where trendline support, basic trendline support lies, right? Well, last night, that's exactly where this thing came into. Basic trendline support, just above 170. You inevitably did get the drop into 170. Okay, before ripping higher. Not only did you get the drop into that key support, and I was saying yesterday that we were basically looking for long triggers right into the support, you got it. You got some building divergence right into the lows. I'm not going to lie to you, I got stopped out on the initial scalp entry, but I jumped right back in after the trigger gave away. Keep in mind, much, much larger ATR here. So initial targets were 71.40, and that's kind of where I got out ahead of the BOE. Now, on the stretch here, you can see failure again ahead of the 618 key retracement at 74.32. Same deal that we're looking at with the British pound. I do expect that you'll see a little bit more of a kickback here in pound CAD, allow you opportunity to possibly get back on the long side, but very basic setup, very basic trendline support, offering some nice conviction on long scalps ahead of the BOE today. Also a good way to be short CAD. Dollar CAD, we'll go over in a moment, is sort of acting a little funny here towards support, but a good alternate to the dollar CAD long position in my view was this pound CAD setup. So that's all good and dandy, Mike, but where do we go from here? Again, look for interim support right at the monthly open. We're approaching that now. 72 essentially, 71.95. And as far as the bullish invalidation level is concerned for for pound CAD. Do we need to adjust that? Let's see. Yeah, I mean, I would essentially want to stay constructive above 71 here, guys. Same thing. Basically, the trend line support. If you look back to the low that we made a couple of weeks ago back here on the July 1st swing low there, you can see some really nice pivot action in price, and that lines up pretty well with the lower parallel here. So, I don't really have too much conviction on an entry per se, but look for initial targets at the monthly open, 71.40, and I think we'll keep the bullish invalidation right at the 71 handle, just to account for that pivot in price. So somewhere around this region. As long as we stay above that, we're going to continue to favor the long side here. A breakout, you're really looking for a stretch back up within 76.20, and that's not even that aggressive in a target. Again, the actual fill for the Brexit gap would necessitate a move as high as 177.30. And in fact, over the next few days, that level coincides very nicely with basic median line off the highs. Really nice pivots, really nice touches. Okay. Now, the only caveat I want to throw out there, guys, and again, I don't want to pad necessarily the recommendations here, but just this, that the sterling crosses are still hypersensitive to what's going on to the UK. And there is the possibility that you get a real mean reversion trade here, meaning we stretch into the 76.20 level or the Brexit fill, and then this thing just wipes everyone out. So I just want to, put that caution out there that if you are scalping this, go ahead and take profits as you go through the levels. Make sure that we're bringing up our stops, and we want to stay as nimble as we can on all the sterling crosses until we kind of get through this week, get that dust settling from the BOE, and kind of get a little bit more clarity on how this government is really going to function under Theresa May. Any questions on pound dollar or pound CAD? Mir says, would you scalp pound CAD on the downside or wait for support to go on the long side? I think you missed the downside, Mir. I actually would have been interested in taking a short off of or against 74.30 just on account of near-term price action, but I don't think I'd want to do that from here. Same thing on the sterling, Mir. That's a great question, by the way, and I think it's something that we should talk about more in the webinars because I feel we kind of stress just the general bias, but from a scalping standpoint, there's the whole benefit is the intraday opportunities that amount when you get these real clean formations. So I think the pound was also an opportunity to try to press the short against 34.50. That would have been an entry somewhere. Let me show you the 5-minute chart here for pound dollar. Bear with me one sec, guys. Okay, here's the 5-minute chart look like, right? Your opportunity to get short on this was here. And that was basically on account of this. I was looking at it this morning, but I didn't want to kind of jump the gun there. Right? You had price action making a higher high, the oscillator making a lower high or equal highs, trigger break to the downside, tight stop, basically 34 against 34.70 is not that tight except for the fact that the ATR on sterling really blew out and has been quite large. So that's the scalp that I would have been interested in on a type of fade. When you're looking to fade these moves, this is a good conversation, actually. It's the same thing with the dollar CAD yesterday. And I guess we can jump into dollar CAD in just a moment. But when you look to fade a move of this magnitude, it's really it's critical that you're super nimble. For example, let's go into the dollar CAD. And this was also highlighted on last night's update. Dollar CAD. Here we go. So this, for me, was a beautiful entry. And in fact, this is an entry that we did take. I think Jamie, I'm not sure if he's still holding the long on this one, looking for the larger upswing here. But from a scalping position, it was an ideal entry. You had confluence support, a key 618 retracement, channel support for the operative slope that we're in under, and a basic trendline support off the lows all gave us this region, right? As soon as, let me bring up again, okay, here's what the trade looked like on yesterday's BOC interest rate decision, right? And obviously on the way down, momentum into oversold territory. Here's the break back above overbought. As soon as you get a close of a spike candle like that into key support, you get the next candle, a reversal candle to the upside, taking you back through 70. This was your entry to fade the downside move with a tight stop, looking for about 34 pips on the upside. And you inevitably got it. This is the kind of price action, momentum profile, move into key support mirror that you would look to scalp on the opposite side of the breakout trade. But on something like BOE for now, where you've already made the break, you've already reversed, and you're already, almost well over 100 pips off the high, at this point, you're kind of chasing the downside to try to scalp the reversal. In this scenario, you'd look for, again, the reset to the downside to get you a better opportunity for the long. Mir, does that make sense? On sort of the difference on how you want to play that? So in these breakouts, you definitely want to be, you got to be super nimble to try to play the pullback. If you miss it, and that's okay, you simply look for the reset here to try to get back on the long. He says, yes, thanks. They're more than welcome, man. All right, so that is British pound and pound CAD. Let's go back to the dollar CAD real quick. If you guys have any questions on this, do let me know. Here's what the dollar CAD looks like on the daily chart. And this is a little bit, like I said, it's acting a little funny down here. Here's what we looked like last night on the update. And the basic premise, and I noted, is I was looking for support right here, or long triggers into this key region, with our bullish invalidation level at 29.25. That's the monthly open. That's the 100% extension of the decline off the monthly high. And you have channel support. So all of it's stacked up right here. And if that gives way, we might be way off for a decline back towards the lower parallels, which could take you as low as 2760, 2780 here before all is said and done. So for me, looking for support into this key region. We're kind of doing that now. Like I said, it's acting a little funny. It's not really giving you too much of a concrete rebound. You're sort of range bounding laterally right now. The trigger that we set forth in yesterday's update, not really panning out, right? You're getting the break, but price is not really following through. So I'm going to sit tight on the dollar CAD for now. I do still like the long side, but with the broader dollar weakness that we're seeing, you might not be able to get that entry here today. It might be a slow drifter before we can get any concrete support lower down in the 28 region. But, I'll be looking for a break essentially of the European opening range here for some tell. So that's saying, or to put things as simply as possible, if we clear the opening range high or the range highs for Europe, 129.55, again, that puts conviction on a possible continuation higher. Obviously, a break of the downside. I wouldn't be looking to chase it per se, but would suggest that you have a lot more downside to go before this thing turns. So not much of a play on the levels yet for dollar CAD from last night. You did go through into the key support. You're sitting there right now. I do like long triggers. You're not getting any divergence or anything of suit really to help us validate the reversal. Broadly speaking, this is a near-term make or break for dollar CAD. Keep in mind now, we're gonna start going through now the dollar crosses, but keep in mind a couple things. Tomorrow is still a pretty big day. You have U.S. retail sales, and more importantly, U.S. CPI, and the inflation print, as we've continued to stress, is really something the Fed is very concerned about. So retail sales are expected to pretty much hold steady for the month of June. CPI, same thing. Core CPI and the year-on-year headline figures will be sort of the most important. So 1.1, expecting an uptick in the year-on-year, and the core year-on-year, stripping out food and energy, is supposed to also hold at about 2.2%. So we will see if we can see if there is an uptick in inflation, or if you start to see this mount. That would actually be pretty positive for the dollar. That would hasten the Fed's argument for some sort of normalization. If CPI comes in weaker than expected, specifically in tomorrow's read, because we're expecting a hold from the previous month. But if you do see CPI start to slip down, that just makes the Fed's job all the more harder. So keep those on tap for tomorrow at 8:30. And quick look at the dollar CAD 5-minute. Yeah, so you can see even the 1-minute chart, 60-40, 60-40, real sideways movement here. Very clearly well-defined London opening range here in green. And look for a break of that range for some validation, with a topside favored for dollar CAD. All right, so pound dollar, pound CAD, dollar CAD, euro dollar is up next. In fact, I have a couple of euro crosses that I'm following: euro dollar, euro yen, euro Aussie, all sort of on the menu for me here heading to the close of the week. Here's what euro dollar looks like. And again, mean reversion trade here has me scratching my head. Let's just say that. So the 1140 level was big in that, well, let's take a zoom out here real quick to the daily chart. So still broadly within the confines of this formation, right, off of the highs. And the monthly opening range is governed basically just above that 50%, 1180. And then you have the opening range low basically at 110. So you simply came off the 50 line. You couldn't get a close below it. You rallied right through. Looks like we're spiking through the midline or the median line now. There's a basic 50% retracement of just the Brexit drop at 111.70, the 50% retracement. Here's the 30-minute looks like. Now, within the confines of that ascent, and I know this looks a little messy. Let's take it to a 2-hour here. Within the confines of that ascent, you might have seen Jamie add this with you guys yesterday on the webinar. This is a modified pitchfork here off the lows. Decent slope, right? Raised floor or higher floor, okay? And then we really needed to close above this just now. I was kind of waiting for a 30-minute close to see if you're going to get the breakout, because if you do, you're likely to see a run towards 112.24, 112.30, which is a big, big confluence region. Remember, we were talking about back in the rally a few weeks ago, which we turned ahead of. That would be, for me, the initial topside objective on a breakout here for euro dollar. But with price action rejecting that so sternly now, I'm not so sure we're going to get it. Here's the 30-minute looks like. And here's the monthly open, 111. So you can see that we've broadly held resistance there, struggled on every approach. If we push back below this in U.S. trade, I don't want to start chasing the long side anymore. I'd be looking for a move back towards the weekly open, the lower parallels as near-term support. But for the euro, it's make or break on a weekly opening range basis. This is the weekly opening range high. If this was legit, you'd want to see a hold above 111.15, 111.20. So not so keen on getting involved per se in the euro I don't think it's quite as clean as the sterling for now. I think the daily chart is very tell, but on the intraday chart, uh, a little cause for concern here. Same thing with dollar Swiss. So dollar Swiss made a pretty dramatic breakdown today. I think, again, this one's a little cleaner because we're now defending the opening range low as resistance, where euro dollar is going right back through the initial opening range high. So notice these discrepancies and notice these divergences can oftentimes be telling. Um, Long story short, while below the weekly open here for dollar Swiss, move on at 98.15, 98.13. While below the weekly open, the risk remains for a move downward. And again, a break below the monthly open, near-term support, 97.60, looks for this confluence support here, basically into the 97 handle. And this is going to be super messy, but just bear with me one moment. I just want to see what this looks like. Well, well, well. Interesting. Okay, something to take into account. I know that makes the chart super cluttery here, about guys, but just to look at this pitchfork, the median line, resistance, resistance, break, support, converges on the monthly open, and the 50 line for the ascending structure right here, basically just below where we bottomed, 97.60. And that suggests, interestingly enough, also that the rebound here can get a little bit more past the opening range low for the week and actually can extend into the weekly open, which again converges on the slope line here off the low and the current 50 line we just added off the high. Converge on these. This is the weekly open here, this dashed line. So somewhere around 98, 98.15. I'd be focused on this key region for Swissy for now. But I'd be broadly looking lower below the weekly open. Any questions on Swissy? Interesting price action here taking place. Okay, the other one is Euro Oz. Another one I've been tracking for a couple of days, but hadn't really gotten the guts to get into it. And the basis of why I was looking at Euro Oz was a very, very simple daily chart. And here's what the daily chart looks like. This is naked, guys, by my standards. Completely naked chart. And there's really not much to look at, but basic trendline support. There it is. Is your yearly open? You tag this support again back in April rather. There's the low. Momentum has been marking divergence all up into the low. Now, as we always note, these momentum divergence signals sub 40 or specifically sub 30 or above 70 tend to be your weakest. So not necessarily anything to prompt action just yet, but certainly you're looking at near-term support here for Euro Oz. Interestingly enough, take it into the 30-minute, and you actually have some clear-cut structure to the decline. So here's your weekly open. The weekly open now converges. Sorry, losing my train of thought here. The weekly open now converges on basic trendline resistance right here. And that was sort of the breakout zone that I needed to see to get this thing going for a little bit more of an upside approach here for Euro Oz. And again, let me just see if there's any structure to the ascent here. Whoops. I put some color to it. Okay, and as far as topside targets would concern, if we do break out, one thing I do want to add, I wanted to show you guys this naked chart first. Very, very simple, primitive, basic setup as our initial targets. $236 takes on right at the yearly open. Or I'm sorry, that's a 38.2, and the initial 236 comes in at 147.54. That's what I wanted. So let's just copy that to the. There you go. Obviously, the weekly open is something we'll want to take into account. There we go. So here are the levels I'd be looking at near term. Okay, if we clear, basically, I would be looking for the high that you made here yesterday, 146.18. I'd be looking to buy rebounds towards 147, specifically 147.50 on a breakout type play here for Euro Oz. With our basic key support, it still needs to be basically with the low day close for the month right here, 145.07. So it might get a couple more days or a couple more sessions of ranging activity, but basic premise of the trade is that you're coming into, again, long-term structural support, and the probability or the possibility that you see a turn higher here on building divergence does keep us focused, at least in the near term, looking for some sort of breakout play here in Euro Oz. Hi, Mike. Just left the room for a while. Did I miss your coverage on Aussie? Not yet, Graham. Right on time, brother. We just covered Euro Oz. I'm going to hop into it right now. Any questions on Euro Oz? Another wider range ATR, guys. Not a small player by any means, so do keep that in mind. Now that you want to talk about the Aussie, Graham, let's go ahead and do that. Here's what Aussie Dollar looks like on the daily chart. So I really don't have much to do here as far as a new play. If you're on the long swing trade, all things held constant, for new scalp exposure, I don't want to necessarily try to fade this yet. Although we are at resistance, I actually did have a small short on this yesterday, which panned out pretty decently. But from here, we're still flirting with a major resistance confluence in my mind. And that's the 100% extension of the advance off the low there. More importantly, structural resistance, basic median line off the lows from last year. You can see some real, this structure has been, we've gone over this here in the webinar at length. The structure has been super clean, both on the resistance, the pivots, and support, and here's that median line confluence with a really nice fib level. So I'm not looking for any new long exposure from a scalping basis from here, Graham. In fact, I do think that you do risk the turn lower. As you guys recall, the seasonalities for commodities, seasonalities for Aussie, for Kiwi, starting next week do turn negative. So you'd expect to see a possible pullback as these pairs approach resistance. But the broader structure, in my humble opinion, still remains constructive while above former slope resistance, now support. So here's what the 30-minute looks like. No changes. No changes, guys, for the Aussie. No changes to the levels, no changes to the bias. In fact, for me, I would probably choke up the bullish invalidation level a little bit to this region, 75.30 of this confluence former. That's the upper parallel that we were talking about now, support and basic channel support. This is a basic 38.2, which lines up perfectly with the weekly opening range low. So this is what we had yesterday as our bullish invalidation. But to account for time and slope, I think you can choke that up just a bit at this point to this confluence region here, right around 73.35, 73.30. So my whole point, Graham, is to say that I wouldn't be surprised if this thing sets back pretty dramatically here near term. Longer term or broader, you stay constructive. You still look to buy a pullback here for Euro Oz, or excuse me, for Aussie Dollar. Where would I look to get into a long today per se? I don't know if I'd look to do that, Graham. To be quite frank, let's see what this looks like on the near term. Excuse me. So, by the way, here was what the print looked like yesterday as far as the Aussie employment numbers. You saw the employment change come in at 7.9%, slightly weaker than or 7.9 thousand, slightly weaker than expected. But the caveat is that we got an upward revision to the previous month from 17.9 to 19.2. So you're coming off a stronger base. This month's was a little bit lackluster. Unemployment did uptick to 5.8%. But it was accompanied by, and this is a caveat we've talked about here in the webinar every day on employment days, it was accompanied by an uptick in broader labor force participation, and that's always a positive. It's always a positive. That means workers are entering the labor force. Okay, it might put artificial upward pressure on unemployment, so I'm not surprised to see it pop up to 5.8. But this is a very strong development because what you've seen since the financial crisis is that there's been a lot of essentially what they call discouraged workers leaving the workforce. Now, it's a little bit different in every country, obviously, in how they measured the discouraged worker or the underemployment rate. But anytime you get an uptick in labor force participation will always be seen as a positive for the domestic economy. Okay, that's more consumer spending or more discretionary spending, build-in demand, et cetera, et cetera, et cetera. Okay, so something to take note here for the Aussie data from last night. Graham saying, thanks. I'm trying to convince myself it will turn at this 76.50 resistance, but can't see a decent pullback signal. Yeah, Graham, honestly, to be completely frank with you, I'm expecting it too. But again, expectations and hope is not a strategy, right? We need something to tell us, hey, this is going to turn over, or hey, momentum is starting to wane. You're not even seeing a day where the dollar is strong. If it was a day where the dollar is breaking out and we're seeing massive dollar rallies, that would be further justification. But that's the exact opposite of what we're seeing. In fact, we're at the lows for the week in the index, right? So I don't blame you, man. I don't blame you. And usually when I have some sort of apprehension like that, you kind of just want to sit on your hands and look for opportunity elsewhere. Hey, Amir, great to see you in the room. Says, I'm late as usual. Can we cover Euro, CAD, and Sterling Yen? Euro, CAD, sure. Euro, CAD, and Great British Pound, Japanese Yen. Okay, haven't covered those in a while, so we'll take a look. I do want to go over the UK for the UK 100 also for Mir, or that was from Mahmood, so we'll do that as well. And we've got 15 minutes left, so let me try to run through these real quick. So that's the Aussie, guys. Moving right along, we went over Euro. I do want to just touch base real quick on Swiss. Actually, we went over that already as well. The daily chart really just a little bit more telling here of the rejection. I just wanted to highlight this is a major critical region, 98.37. Okay, that was the region that we were looking at yesterday. Oh, or the earlier in the week, rather, excuse me, for dollar Swiss. You had so much here. You had the 200-day moving average. the 618 retracement of decline off the highs from May. Former slope support, big pivot. Okay. Former upper median line parallel, and they all converged right there. And the highs, that swing high from last month as well. So from a near-term standpoint, that break does mean a little bit more of a dramatic downside break or a dramatic downside move. As we said, the recovery here, look for resistance initially, basically right about where we're approaching at the weekly open. That's dollar Swiss. Kiwi dollar, last up on the list before we jump into your questions, looks like this. Another one that's going to probably grant a little bit more attention from us over the next few days. I do have us coming into structural support basically around this region near term. And here's what the 30-minute looks like. This is basically all I'm focused on with the dollar, with the Kiwi right now, is this formation. It's been super clean. There's really nothing else you really need to, over the last couple of days, there's been really nothing else that you kind of really need to stress. So you're coming into support. You're making some minor divergence into that low. Might be a decent long scalp heading into the U.S. session. No triggers just yet. But I'm basically looking for some near-term support here on the Kiwi. Huh. There's a 1618 extension there too. Look at that. Boom. Look for that level there. A break below that, in my mind, would validate a break of the weekly opening range. Remember, we're not too far off that. The weekly opening range low comes in at 72.12 here, 72.10. So you're just below that region, but this confluence region here, if we do crack, look for a drop towards 71.50. More importantly, 71.80 is where the high day close, former high day close, converges on a basic 618 of the advance. So I think the levels are pretty clear on a breakdown scenario, but near term, I am looking for long triggers against this near-term support. All right, so that is Kiwi dollar. My notes say approaching support, and we covered that. All right, let me get into your questions here. First on the UK 100. I don't have anything set up on that, but let's see. All right. A little messy, but such is the UK 100 typically. Okay. Interesting pivot zone here. I just want to highlight of near-term importance in my mind. We're right here. Okay. Stick with this for now. Again, this is completely on the fly, Mahmood. I don't really follow the UK 100 with quite as intensity. I think the SPX is a little bit more of a clear breakout scenario at this point. Not really looking at that here with the same type of fervor, but I would say that you are coming in some interesting near-term resistance. A breakout from here, I think the level is pretty clear that you want to look for a rally towards 69.35 or so, right around this region, which you have the upper median line parallel and 88.6. Retracement of decline off the high. So that would be sort of a nice initial region or a target on the top side if it breaks out for guys who are holding longs. Near term, I'd be looking for support right around that swing high that we made back in, what was that, April? Right around here. Hello? There we go. Which would put key support right there along the median line as well. Keeping in mind that the monthly open comes in right here at 65.60. So Mahmood, I keep saying the wrong name. Sorry about that, Mahmood. You look for a little bit more of a pullback from this region. Initial support right there at the monthly open, then a little bit more of a critical support very near 64.30. I think this is where you would start to look for a little bit more of a concrete hold if the upward trajectory is going to hold. And remember, from a fundy standpoint, for everyone who's saying, "Oh my God, the BOE or the UK is still going to be in a disastrous state," and these are all wishful thinkers. At the end of the day, we know there's more easing. We know that pound weakness is going to stoke inflation, which is only going to help the BOE's inflationary targeting. And I think that risk assets will respond in kind. So I'm not too surprised to see the strength that we're seeing here. Near term, I do want to just bring up an RSI indicator, and I would expect to see that this thing looks like it's a little tired. Yeah, as we head right into 70, that's still pretty constructive. Still pretty constructive. But I'd be watching for near-term resistance right around this region. All right. Mahmood, does that help on the UK 100? Expect to see a little bit more of a pullback here, but I do stay constructive above 64.33. He says, yes, it does. Cheers, sir. Next question from you guys. Someone wanted to look at, I think this was you, Amir, EuroCAD. Coming right up, sir. Here is what EuroCAD looks like. Oh, this one. Yeah. Listen, I got nothing to do on this one, but I've been watching it super close. And I haven't been even watching a scalp chart. I don't even think I have a scalp set up. Yeah, I don't. But all you need to do on this one, and I smile because I got excited about this earlier in the week saying, whoa, this could be it. Look, it's like a consolidation, but not really. You can see that there's like sort of some channeling going down here. Longer story, I'm looking at the median line off the high as support and basic trendline resistance off of the May high as resistance. And you can see basically a consolidation pattern happening or a tightening range. Long story short, this is a 1618 extension from the high. And although we've broken below it already, basic trendline support off of the December low now converges there as well. So for me, this is a clear-cut breakout trade until it breaks out. Personally, I'm not really looking to scalp it per se, but you're looking for either a move below last month's low, which would validate a break, or a basic clearing of the monthly opening range high, which would break that multi-month trend line. So, even the momentum signature has kind of been going 40-60, 40-60 for some time. Right? So I'm not too surprised to see what price action is doing. It's a range until it's not. So for those of you who want to play this near term, certainly the levels are pretty well defined. Sell near support or sell near resistance, buy near support. For me, I'd rather be looking for us to clear this chop before getting involved in this trade. Speaking of the Aussie, the day before yesterday, I asked you about Aussie CAD to go short. And you said that it ain't ready yet because RSI did not cross down. Do you look for RSI above 70, twist down across 70 to the downside for the trigger on the daily time frame? Is it ready now? Mir, great question. Aussie CAD. I'm going to go into that in a moment. Any questions here on EuroCAD before I move off? Amir, does that help on EuroCAD? You're the one who asked on this one. I don't have a scalp setup for you near term, but the daily chart, I think this is all you need to do. Take a snapshot of this um, if you need it for future reference. He says, nope, thanks, clear. All right, awesome. The other pair you wanted was pound yen. And I think that's definitely worth taking a look at. Let's see what pound yen's doing. Clean break of the range. So clearing the monthly open, clearing the monthly opening range high, coming back and checking former slope support, turned resistance, turned back into support on a break in the upside in momentum. I like this higher. I like this higher. Again, as far as the near-term chart's concerned, if you guys remember, we put this scalp together in the webinar a couple of days ago, I want to say. I'm not sure if it was this week or last week. But the basic premise is there is that monthly open, the 50 line, and basically sort of the breakout level that we talked about. Came back, checked it as support, rebounded higher. Again, another trade that I do like to the upside, specifically with what we're seeing pan out in the yen. I do like continued yen weakness. And I just, the funny thing is, guys, I just don't understand why everyone's so surprised about the yen. Like, if you take a look at the dollar yen, and you guys know how I feel about the yen, and if you don't, I'm not about to get into it, but I've had a long history with dollar yen, and way back in the day when dollar yen was back at 130s and 140s on that decline into the 70 region. I was a little bit earlier in my career, and I was that guy trying to fight that trend. Long story short, if you look at this, on a longer term trend, every time dollar yen has sort of come into these regions, we've seen pretty strong reactions. Look at the inflections. Support. When you break, you saw the run through. Once you broke it, you checked it as resistance. Key support. And here we are again. Like the fact that everyone's getting caught completely, still trying at all end to sell this is a little concerning for me. And in fact, giving me a little bit more tell that, you know what, this thing probably has got more upside to go. Is likely to pull back to the monthly open or straight high from here. Amir, you're talking about what? The pound yen with that question? Yeah, pound yen. So, I mean, honestly, it's the same thing here with dollar yen, right? There's the monthly open. It wouldn't be surprised if we come to the monthly open, but I do think that you look higher. For pound yen, uh, yeah, I mean, I think the monthly open or basically today's low would be the bullish invalidation. You'd want to stay constructive above today's low. The market's never going to do a one-sided AWOL move, Amir. I don't think you're just going to go straight into 149 from here. Um, you'll get some back and forth. Will you make it all the way back to the monthly open? I can't tell you. All I can tell you is that you look for price action to start giving you some structure, and on the pullback, look where you would find some support. So for this, here's what the 30-minute on pound yen looks like. I also want to see what this looks like. Oh, that's what we had last week that broke, right? Yeah, I'm not going to stress that one per se here yet. And the first level I would want to just take a look at is the Brexit decline. Sorry, guys, bear with me one moment. Those levels I'd be watching. Monthly open support, which we already tested it, kind of like false broke and reversed. That breaks basically gives you 137.30. That confluence is pretty decently on basic channel support, with near-term resistance at a basic 50 of the Brexit range, which also takes you into channel resistance, and that's right around 144.35. Key resistance 147 into 148. It's a 100 pip range, but it's pretty critical. Okay, you got the longer dated 618 retracement and a 618 retracement of just the Brexit decline. Interestingly enough, again, you'll also see some of those swing lows and the close lows that you made for last month before the inevitable Brexit break. So sort of a big region there. But hope that helps on the near term. 444 pip ATR, sterling yen, says Graham. You're absolutely right. They didn't call it the dragon for no reason. So you want to use some caution playing on some of these sterling crosses. Very big ATRs. Absolutely. Absolutely. Yeah, if you're newer to scalping or intraday trading, not a pair you want to necessarily get your feet wet with. But for those of you who've been with me for a while, our bread and butter sometimes is on these bigger ATR trades. So Mir, I do want to jump into your last question here. We are over on time, my man, but for Aussie CAD, Amir says, thanks, Mike, very helpful. Hey, you're more than welcome, man. Mir says, day before yesterday, I asked you about the Aussie CAD to go short, and you said that it ain't ready because the RSI didn't cross down. Do you think RSI, or do you look for RSI to go above 70, twist down across 70 to the downside for a trigger on the daily time frame, and is it ready now? So here's the 764 retracement that we tagged yesterday, right? And the reversal. From a trend standpoint, Mir, yes, this is a sell right here. The close below 70. And the one thing that you need to remember, and guys, this is a classic mistake that even guys that publish research and are traders and have done this for a while always forget. These oscillators, my friends, are based on the closing price. Intraday, a RSI signature on a daily basis isn't going to tell you anything, okay? Because until this candle closes, you have no reference point of where this line is going to be pegged, okay? This right now could rally right through, or yesterday, for example, it could have been breaking down. It looked like it was below 70, but a reversal ahead of the close pulls it back up, and then the oscillator would look like it never even broke. So on any oscillator that you use, you need to be mindful of how it works. On RSI and stochastics, on ROC, these are all based on the closes for the candle. So if you're looking at a 30-minute chart, it's a 30-minute close. If you're looking at a 5-minute chart, it's a 5-minute close. If you're looking at a daily chart, it's got to be the daily close. So yeah, you got some kickback here on a breakout. The one thing I was concerned about with this, I remember the conversation, was that it looks like we were breaking through channel resistance. False break scenario takes you back below. I mean, you're asking, is it ready to go short? Again, from a trend standpoint, yeah, it's vulnerable at this point, but you're still at support right here. Low in price, and you're at support and momentum as well. So these are what we use momentum triggers for, right? So price came right back, is at support. The oscillator and momentum also at support. This is the trigger for me. This is the trigger for me. So Mir, if we break below this on a close basis, price moves sub 98.46 on a close basis, I would be looking for a rally to sell, right? Because that tells you that the momentum signature has changed. There's a change in the profile of what's happening from a momentum standpoint. And for me, I'd be looking in such a scenario to play just basic targets to the downside on the rally off the yearly low. Bring that 236 in, get rid of this 50. There we go. So that's sort of the game. That's sort of the levels I'd be looking at near term. Mir, does that help? You're absolutely right. The break above 70 is not the sell signal. It's the break below, the turn and break below 70. But when you're looking at a daily chart, it needs to be a daily close, and that would signify trend shift. This is why we use the 30-minute and the 5-minute for the actual entries, right? Because if you're in overbought, you're crossing below 70, you're at resistance, that's when you want to try to take the short. If you remember yesterday, or I'm not quite sure when we were talking about this, if it was yesterday or the day before, Mir, but if you remember, also, price hadn't really stretched into that 786 yet, right? We hadn't really seen a tag of this at 786. This didn't happen until basically during or right after the webinar yesterday is when we tagged that high. And that was the exact 764 retracement. Again, I don't have the scalp set up here necessarily for Aussie CAD, but you could see it pretty clearly on the daily. All right. So, Mir, hope that helps. He says, thanks. You're more than welcome. Guys, that wraps up the webinars for this week. I want to thank everyone who joined. Again, we'll be back on Monday for a public webinar for free on Daily FX. And then we'll be back right here on Tuesday, Wednesday, and Thursdays for subsequent intraday strategy webinars. Have a great weekend, guys. Best of luck trading. Watch that U.S. data tomorrow. May offer some volatility on the dollar crosses. And we'll try to keep you updated on SB Squawk. Cheers.